Okay guys, just thought I'd do a quick market wrap. Here we are, a minute away from the European close, final close of the week of course. So let's have a little look. Start with equities. Start with the US. You know what, I'm just gonna clean up these charts because they got a bit messy. As you can see, this is a 60-minute chart looking back over the week. So just a quick recap. Certainly a kind of downward trending theme for sure. A little bit messy here. There's no channel on this move. Let me just add another line here. And there was a kind of, yeah, I'm not even going to bother with that. So downward trend. I mean, if you looked at the weekly chart, as I mentioned in the room earlier, then definitely a negative week, of course. Having had a couple of positives last week, just positive, hardly anything in it. But this one definitely categorically bearish, with the red body of this candle fully engulfing the entire candle from last week. So definitely negative on the week, and that was really mainly talking about US equity specifically. There's only two main reasons why it's been a negative week. Number one is the Fed Governor Powell being more hawkish than we perhaps had expected, and so this certainly led to the movement that we got. Let me just get my so this kind of move here was certainly as a result of that, and then the second big move of the week to continue the downward trending thing was the sell-off last night. And so Powell being hawkish, and then Trump, I guess, riling markets to a degree with his bombshell on steel and aluminium tariffs. So two negative themes for the week, one monetary policy related, one politically related, but certainly a down week for sure. Just check out and watch this into the close tonight. As I was saying earlier, we've had negative closes on Wall Street for the last three sessions, very negative closes, so we'll see if we get 4 out of 4 or not. The theme across the equity space is similar elsewhere, in that the DAX has come steeply off here, and in fact when you're looking at this on a daily chart, then we actually set a new low for the year today on the DAX. It bottomed out at 11,868, so believe it or not, the DAX broke below the February correction low today. US stocks are nowhere near this equivalent level at this point. What was important for the DAX here was actually this was also a kind of key double bottom around this same price area back in August of last year. So let me just check, because I think in the end, let me just draw a line in here. In the end, that low from August, we just checked, was 11,863, and the low today was 11,867. So just 4 points off that summer low. And if I show you on a weekly chart, you'll get a better sense for this. The summer low last year for the DAX was important before we then launched higher. And so actually, yeah, this is back to levels we haven't really traded since the beginning of 2017, really. So definitely negative here. We had some weak data out of Germany this morning on the retail sales front. And then you could argue, of course, that Trump's steel tariff might well have a negative effect on some German producers. Germany, one of the biggest players in the sort of international steel market and importing steel into the US, and they might suffer as a result of these new tariffs, so that's certainly helping. So that's the equity space. Negative week, finishing on a negative note. Another down day today. Let's think about gold quickly and have a look back on the week, and we'll look at a daily chart, because it's been a negative week for gold, and that's mainly driven by the move down on Tuesday. And let me, you know what, I'm going to tidy this chart as well. Let's get rid of everything. Mainly a negative move down on Tuesday, which is that candle there, and that was the hawkishness from Powell, the Fed governor, testifying in front of the House, and what he said was, in the end, and it wasn't straight away, but subtly more hawkish than people were hoping for. So maybe an uptick on the probability of a further fourth rate hike in 2018, and that meant gold dropped. In the end, technically, just about hung in above the 1300 handle. 1307 was a really important price point, the double bottom for 2018. We broke it briefly, and the low was 1303. So a little bit like the DAX made new lows for 2018 today, and gold made new lows for 2018 yesterday. But technically, you'd say that's a support being found and a rebound. So important for gold to close above yesterday's open, I'd say, technically, and then you might find some kind of bullish reversal candle out of yesterday's session. Let's go. Oil's had a really bad week. So along with the kind of equity moves, gold has definitely had a very similar, oil's had a very similar pattern with a trend to the downside all week, and it's been a big one because we've gone from $64 to 60. Getting a bit of a lift now as I speak, actually, trying to clamber back up towards the 61 handle. But this was about dollar strength in the first part of the week as Powell was hawkish, and then it was about builds to US oil inventories. So the Department of Energy data on Wednesday led to this kind of what was a choppy, violent session, but in the end heavily to the downside. But this move earlier in the week was about dollar strength. We broke lower this morning. We've tested 60 bucks. This is a double bottom for the week, pretty much. Yesterday and today, just trying to stabilize. It's important for oil to stay above 60 bucks into the close, I'd say. Technically, any move and any close below 60 would set up another bearish week next week. Let's have a quick look at the currency space. So it's been a difficult week on the Brexit front. Plus, the first part of the week, we had some dollar strength from Powell. So if I highlight this week there in the rectangle, and again, I'm going to tidy up this chart. These charts have got a bit messy. This is this week, and obviously we've stepped lower. And, you know, key test and break. And is it a break? We'll see where we close today. But the February low at 137.80 definitely got a good testing and got broken. We've had Theresa May speak today, but actually, if I go to a 60-minute chart, today's session's been quite quiet. I've got that line in there, 137.80. That was the 137.80 was the mid-February low. So this week's been quite contained. Today's been quite contained in a tight range. If I put the pivot on here, which it won't let me do for some reason. Let's try that. Hang on, let me put the pivots back on because the pivot level's been solid today as key support as well as R1 on the upside. But definitely a negative session. Negative week for sterling. We'll see how this May speech gets kind of interpreted in the press, digested over the weekend. EU's Juncker didn't like it. That's May's speech, that is, and he says the EU must take measures to respond to planned. I'm talking about Juncker's talking about the tariffs now in the US. Sorry, I'm reading off my Twitter feed here, but Juncker in Europe didn't like Theresa May's speech. That was his first kind of comment. We'll see over the weekend. I thought we got more detail than I was expecting. It was a better speech than I thought it was going to be. That's why sterling has survived and has not added to the week's downside. For the euro dollar, it's been very much a mixed week, a week of two halves. And let me tidy this chart as well. A week of two halves where we've had that downside first half of the week off Powell hawkishness, and then we've had this reversal and the tariff chat from Trump led to dollar weakness, and this has enabled euro dollar to move back higher. And in the end, a little bit like cable, we tested and broke the mid-Feb low, but actually now we're back above it. It's a bit confused, a bit mixed, but you can see certainly euro dollar's still up around the highest levels we've seen for many years. We've got a double top up here for 2018 that's huge as a level, we'll see what happens next week. Because, of course, next week's ECB week. And are we going to get some further hawkish moves from the ECB or not? If so, then we can certainly push to test 125.76. Or are the ECB going to back off a little bit? Are they going to extend QE into the end of the year, for example? If so, maybe there's some scope for this pair to move lower. So that's the FX space. And I'll just finish with T-notes, US 10-year bonds. And on the daily chart, this week a positive week. And actually, if I show you on a weekly chart, opposite to kind of equities, T-notes have not had many positive weeks in recent months. But actually right now we're trading right bang on the same price we opened at the beginning of the week. So we've got a clear classic doji here at 120.23. So in the end it was definitely the big move lower. Well, let me go to a daily chart, because T-notes this week on Tuesday moved lower as yields pushed higher off Powell hawkishness, but since this tariff news from Trump created a bit of risk-off vibe, actually T-notes have bounced and moved back higher, enabling a positive or a flat week. But as you can see, all of yesterday's tariff gains have been given back today. So definitely some decent action this week, some interesting moves. Next week's packed. ECB meeting, as I mentioned, but also packed full of economic data, where we're going to get services sector data from across Europe and the US and China. But then really the big one, the absolute grandfather of all economic data releases, will come on Friday at 1:30 p.m. And it's not non-farm payrolls, although that is happening at the same time. The data we're most interested in is wage growth. What's the wage growth figure for February going to be? Because what triggered the collapse in global equities at the start of February? It was the wage growth data for January. This massive sell-off, the biggest sell-off we've had in years, was triggered by January's wage growth data. Well, on Friday next week, we get February's wage growth data. And we want to see if wages are actually going up sustainably, or was January a one-off. This is massive, really key for that whole story around how many times the Fed are going to hike this year. Massively important for global markets. So Friday, 1:30 p.m. next week. Big news. All right, guys, that's it from the trading floor. Safe travel home if you are venturing out into the snowstorm. But otherwise, enjoy your weekends, and we'll catch up on Monday morning. Thanks a lot.